Happy Thursday, everybody. Thank you so much for joining us. I don't know if you guys can see my eyes very well, but the pollen came in this week with a vengeance. I'm talking like supersonic pollen came in. And at first I was okay with it because the sunshine came with it. That's what happens in the spring here in Georgia. But the sunshine was short-lived. We're back to the godforsaken rain, and it's not taking the pollen. So if you hear my voice a little bit scratchy and you see my eyes a little bit red, you can thank the pollen. Does anybody else have these allergy issues? I struggle every year. I start my nose spray like a couple of weeks in advance, and yet, I don't feel like I'm really seeing a big difference this time. But welcome. Thanks for joining. Where are you joining from? Tell me where you guys are tuning in from. This week, we're going to dive in talking about the spring market. What is the spring market going to look like? That is a question that so many people have been asking. Heck, I have too in some cases because there's just been ups and downs, and normally we're seeing patterns, and right now there's anything but. So we're going to dive in that today. So tell me where you guys are joining from. I appreciate you guys tuning in this week. I know Thursday night, 6 o'clock. Every week we sit here and talk about the market and what is going on. So always feel free to drop a comment below, ask questions, anything that you need. I will definitely try and get to each and every one of them. But let's just dive in. So interest rates have continued to go up. That's not a surprise. A couple of weeks ago, they had dipped down to 5.9%. And I think a lot of us got really excited that the forecast of later on in the year when interest rates were going to go down, that they were going to actually be going down sooner than we thought. And that was really exciting. Unfortunately, that was very short-lived, probably about 24 to 48 hours. And we jumped right back up over 6%. And now we are just over 7%, right at 7%. So we're still seeing that trend continue to rise. We'll see what the job reports come out with this month. Obviously, I'm not part of the Fed, so I can't tell you exactly what it's going to look like, but I'm betting that we are going to continue to see a little bit of that moving forward. I don't think that they're going to continue to have major increases, but I do think that we're not coming down just yet. I don't think that we're going to see that until the fall, maybe even the beginning of 2024 now. I was actually discussing, I had lunch with my lender, Tyler Pate, earlier this week, and he and I were discussing because I understand how inflation works. I understand that they're trying to get spending under control, and before that they will bring interest rates back down. They want to feel like they have spending under control. What I don't understand, so if you have any light on this, please, by all means, someone smarter than me, share. They want unemployment to rise so that they can bring interest rates down. That just doesn't make any sense to me. I understand that if unemployment is higher, then that means that spending is going to be less, therefore interest rates can be lower. However, I don't see the balance in having people unemployed and not having jobs, because then what's the point of bringing down the interest rates, because now they can no longer afford to buy the house to begin with. I would much rather have people having jobs. There's got to be some sort of balance. We have to have a better way to do this. So that being said, I do understand, and my lender, Tyler, he's amazing. If you haven't talked to him, you should. He was talking to me about, you're looking at it from a very skewed view of just people not having jobs. A lot of people over the last couple of years, when things went virtual, a lot of people opened businesses, and then a lot of businesses such as restaurants and things like that went out of business, unfortunately. So that's when unemployment skyrocketed. So of course, that's when interest rates dropped. Now a lot of those businesses have opened back up, or they've opened back up under a different name. So that's when unemployment dropped back down. And so now interest rates are going back up. So I never really stopped to process the shutdown and what that did for unemployment as far as businesses closed. Obviously, there was a time where everything paused and there was a lot of unemployment, but I didn't think about it long term. So tell me, drop in the comments below, is that something that you have concern about? Like when interest rates are coming back down, that probably means that unemployment is going back up. So I would, like I said, love to hear from somebody else on that topic. It's definitely something that I'll be watching closely because this month we're going to be seeing what the job report says, and that's really going to dictate where we're going with interest rates. I don't think, like I said, we're going to be going down anytime soon. So what have we been seeing with the spring market here in Georgia? Usually around this time is when it's starting to kind of ramp up. Usually by April, we're kind of really ramping up. And then getting into May, June, July, we're in full swing. The hard part is nothing is really even, so to speak. I mean, we're seeing like the tale of two houses, basically, right? Like some houses are sitting on the market for 30 days. Some houses are going under contract within 24 hours. This weekend, I actually was super bummed. I have a young family that we're trying to get into a home, and I have seen multiple offers the last couple of weeks, but it has been nothing like the last 2 years. It was 2 or 3 offers, maybe $5,000 over asking. So it's still multiple offers, but it was not as aggressive as it was previously. However, this weekend, this young family, we went in, we made an offer, and we went $15,000 over the asking price, which I honestly thought was a great offer. And just to give you a little bit of an idea, anytime I'm about to submit an offer, I will call the agent first and ask them, do you have any other offers on the table or ones that you're expecting to come in? I wait for them to give me a response. Most agents are not going to give you a ton of information, but if you ask them yes or no questions, they will a lot of times kind of just give you a guide of, you know, where you're going so that you can write the best offer that your clients possibly can, obviously within their comfort zone. So I call the agent, ask, do you have any offers? Are you expecting any? Yes, we have 5 and I'm still expecting some. And I thought, Jesus Christ. All right. I said, you know, you're listed at 300,000. Do you have any that are over 300? Yes. Okay. Are they all over 300? Yes. Oh, crap. If we come in at 310, do we stand a chance? No. Okay. If we come in at 315, do we stand a chance? Possibly. I'm like, okay. So we go in at 315 because quite frankly, that's the best that they can do and still be comfortable with interest rates continuing to rise. And the hard part is if you're looking for a home and you got qualified just a couple weeks ago, but you didn't lock in that loan because you didn't have a house yet, well, the interest rate 2 weeks ago versus now is extremely different. And so what you could have afforded 2 weeks ago is not what you can afford today. So you're having to really drastically change your search parameters almost day by day, week by week. That's hard for people. That's hard for buyers, especially first-time home buyers. It's very overwhelming. And so we ended up with 11 offers on that property. We did not get the property. It went over what we were comfortable offering. It had shorter contingencies again. Contingencies are going to be, you know, your appraisal contingency, finance contingency. So a lot of agents, you'll see them suggest, because they can't tell you legally, they cannot tell you to do this, but they can suggest for a great offer. You could waive appraisal. You can waive the finance contingency. You could come in with cash. You can waive the due diligence, which is your time to inspect the property. We're going back to where we were last year, early last year, and the year before that, to where it's just a free-for-all. But not all houses are like that. So my clients made a very smart decision and said, you know what, we're just going to bow out because we're not waiving inspection. We're not waiving appraisal. They're young. They don't have the finances to just come in all cash. And so they bowed out, and the house ended up going about $40,000 over the list price. But yet we've seen some other houses and they've been on the market for 30 days. So what's the rhyme or reason? You know, what is the rhyme or reason between the house that's been on the market for 30 days and the house that literally has 11 offers? Number one, it's going to come down to location. The areas that are selling the fastest are the areas that are more desirable That's an obvious. So another thing is the price point. Anything below $400,000 is still something that's being sought after for the simple fact of first-time home buyers are still trying to get into the market. A lot of them put a pause on the market last year because they were being flooded out by investors, by other first-time home buyers. So they just got completely frustrated and said, you know what, we're going to put it on pause for a minute, rent for 6 months. And now that 6 months is, come around and they're jumping back into the market. We have not really seen a huge slowdown as far as buyers coming out. A lot of people have gotten over the shock of, okay, we're not at 2.5%, 3% anymore. People have kind of accepted the fact that interest rates are going to be around 7%. The problem more than anything is inventory and the lack of inventory. We just don't have enough houses listed on the market. And the houses that are move-in ready, that have a good floor plan, that are in a decent area, decent neighborhood, those are the houses that are going quickly. One of the things that we talk about when you're looking at buying a home is making sure that you're not only looking at your home, but you're being a little bit nosy and looking around you and looking at your neighbors. Some of the houses that I've shown recently, the house itself is really super cute. The neighbors, not so much. The neighbors, it's rough. When you have people peeling out down the street and racing, y'all know. When you have a lot of stuff in your front yard and your neighbor's front yard, it's a hard pass. So that's something that I strongly, strongly suggest when you're buying a home. Don't just focus on your house. Look at the community that you're buying in as well, because you always have to be looking at resale value down the road, because chances are, statistics show that people stay in homes 7 to 10 years. I've been in mine 12, so obviously that's not always true, but it's a statistic. And so if you're thinking 7 to 10 years from now, you might make a move, you have to be able to sell that property. And your neighbors might be the reason that you're not able to sell, or that you're not able to sell for the price that you are hoping to get. So that's definitely something to keep in mind. I wanted to pull up this article that I read over here, and it's in Realtor.com. So the market had been on life support the past few months as high prices and rising mortgage rates had sidelined many would-be buyers. Buyers were frustrated, sellers felt trapped. So that's another thing, right? A lot of sellers right now, people are like, well, why don't we have inventory? What's happening with the inventory? A lot of sellers just aren't listing their homes because they're in a good interest rate. Even if they didn't buy in the last couple of years at 2, 2.5, 3, if you bought in the last 10 years, you're probably at 4 to 4.5. Interest rates have been historically pretty good for the last 10 years. So even if you're at 4.5 or 5, it's better than what the current interest rate is right now. And so a lot of these people are like, why would I sell what I have in order to buy something at a 2% higher interest rate? So the people that are selling are either the people that are relocating and they have to sell, or the people that are like, you know what, I have so much equity built in right now. I would be stupid not to go ahead and sell. I'll take the interest rate hit because by next year it will probably come down and I can go ahead and readjust that mortgage back down. That's what it's like, a cycle. Interest rates are high, so people won't list. Well, so buyers can't, buy. So then that's driving things into multiple offers. And so now we're back in inflation. It is a vicious cycle that somehow we have to find a happy medium on how to break. So then let me show you guys on this here. The spring is likely, let me just pull it up a little bit. The spring is likely to make a turning point. Chief economist of the National Association of Home Builders. You're at the low, but you can start to see better days ahead. How far ahead those better days are remains to be seen. The spring housing market is likely to be busier than the dead of winter, but real estate experts anticipate it will be slower than the wild frenzy the market experienced at the height of COVID-19. Well, can I just say, duh? I don't feel like they're telling us anything we don't know there. I also don't feel like they're really giving us any hope that this market is going to be significantly different than that. And like I said, I've been seeing multiple offers. I'm seeing, agents suggesting that you're waiving your contingencies and appraisals and things like that. So, you know, I can't say that it's the best option as far as coming into the spring market. What I am hoping that we see is home listings going up. And I will say that we have a little bit of hope, a little glimmer of hope on that side, because we have started to see more inventory coming on the market. We have started to see people listing their homes a little bit more. So numbers went up from February to March as far as homes that were actively on the market. Um, so that's a positive. Starting to see more homes come on the market is definitely a sign that our spring market is going to be more of a normal market and come on with more listings. And that way there's going to be more inventory for buyers to choose from, which that's, again, like I said, that cycle that we're seeing where buyers aren't having the ability to have options. So if we start to see more homes, more inventory coming on the market, then that will definitely give buyers more options. And then hopefully that will kind of balance out and we won't be going into multiple offers. And then we will have a little bit more stability in terms of pricing and not driving the pricing unnecessarily high for some of these listings, because that's what we were really seeing for a little while there. So if we scroll a little bit further down, the number of homes for sale was up 67.8% year over year in February. So that is fantastic news. Meanwhile, those unicorns in the housing market, the adorable move-in ready homes in popular neighborhoods, continue to sell briskly, often for over the asking price. So that's what I was just talking to you guys about, right? The fact that we are still seeing multiple offers. It's not constant though. It's not consistent. So I've gotten many people under contract this year and we did not have to go into a bidding war. We did not have to waive our inspection or our appraisal and finance. We went in with what I consider to be traditional numbers in your contract. So a 20-day finance, 20 days for appraisal, a 7-day inspection period. That way it gives you time to get those inspections done, because a lot of people don't realize you have a lot of options when it comes to your inspections. You have just your traditional inspection, what's going to cover, shingle to slab. But you also have other options such as radon or mold, termite, and those sometimes take a couple of days. A radon test, they actually leave in the home for 2 days, and then the inspector goes back and gets it because they want to take readings at different times. So those take, multiple days to have. So you don't really want to waive that inspection period too low because it doesn't give you the necessary time. Plus, when you get that inspection done, usually with the inspectors I use, they get it to you same day. Some inspectors are the following day, but you want to have time to review what the inspection says, kind of take it all in. And then if you have any questions on it, you might need to talk to an a contractor, somebody that's going to be able to give you more information on a specific detail that the inspector brought to light. But they'll tell you, I'm not a contractor. I can't tell you what you need to do to fix that. So you might need to talk to somebody else. So it's really risky waiving those contingencies. I do not ever recommend it unless you are just 100% positive that you love this house, you've looked it over with a fine-tooth comb, and you're willing to take that risk, because it is a risk. So totally up to you. Realtors work for you. We'll do what you ask, but we are going to tell you our opinion that it is risk. So again, looking over here, the number of sales, that is a positive number, up 67.8%. But finding those unicorns, and that's what I was saying, those are the ones that are going quickly. Desirable areas, good school districts, good quality homes are still going to sell well and face bidding wars. Not all of them, but they can. So what will the norm in the housing market look like? Buyers can expect a shortage of well-priced turnkey homes and plenty of competition for the few that go up for sale. Mortgage rates are anticipated to bounce around in the mid 6 to 7 range. And while home prices won't shoot up again, even if they dip a little in certain markets, they're expected to remain well above pre-pandemic levels. So what does this mean for you if you are a buyer in the market? It means that you need to wrap your head around the fact that the news media, I don't care which one you want to look at, a lot of them are doom and gloom and fear. Why? Because fear sells. fear gets your attention. I always tell you guys, I cannot speak for national numbers. I can speak for Georgia numbers. And with Georgia numbers, we have seen a slight dip, a slight dip. And that's only on certain properties. Certain properties are still right at list price and still going over. So a slight dip in the market. We gained over 20% in 1 year. So even if we saw a 5% reduction, which we really haven't, we're still not even close to what we were. Forget pre-pandemic, we're not even to where we were a year ago. So you have to wrap your brain around that if you want to buy a home this year, you're looking at paying close to list price or just under. You're not coming in with these crazy, oh, well, I can just ask whatever or offer whatever. You are going to have to be swift in your decision. That doesn't mean you have to go wait in line for the house like, pandemic times where we're waiting out there, have to write an offer that day. But it does mean that you don't have a lot of time to waste because a lot of the homes are going within 24 to 48 hours or within the first week. So if you think that, you can just take your time, you have to be okay with the fact of if I lose this home, it's not going to make or break me. So that's something to keep in mind. And you have to be good with the fact of your interest rate is going to be probably somewhere between 6.5% to 7%. That's just where we are right now. If you actually take a look here, let me see. Yes. So if you take a peek, as of Thursday, March 9th, 2023, current interest rates in Georgia are 7.16 for a 30-year fixed and 6.34 for a 15-year fixed mortgage. So that tells you exactly right there what you're looking at. That tells you right there. So don't try and think about the fact that you're not, you're waiting on this unicorn to come through. You're waiting on interest rates. If you need to buy a house, buy a house. Buy a house this year if that's what you need to do or want to do, because interest rates can always be redone later on. You're not going to have the competition because what's going to happen when interest rates come down? Well, everybody that has the same thought process you do of, oh, well, I'll just wait. Well, they're going to flood the market at the same time you do. Well, so now you're into a bidding war. And I wish I could have pulled it up. I should have pulled it up. Now I'm thinking about it. I won't waste your time, but I'll pull it up for next time. There was a post that was done by Keeping Current Matters. They're a great website that I follow, and they share all sorts of fantastic information. But they were talking about that if you paid $75,000 to $100,000 over asking price, which many people did last year or over the last 2 years, if you paid $75,000 to $100,000 over asking price, or you took a 7% interest rate, you were at a better price taking the 7% interest rate than you were taking the higher price. So if you can take the higher interest rate now and still be at a better price, and then you can renegotiate that, you can refinance with the lender and get that interest rate lower, then you're at an even better price. And something that I wanted to share with you guys, let me go over here actually. I wanted to pull this up for you guys. PMI insurance reduced. The PMI is something that unfortunately, if you have put less than 20% down on a home, then you have to have private mortgage insurance. And private mortgage insurance doesn't do anything for you. It's 100% for the lender, but it basically is a CYA for the lender that if you were to default on your mortgage, they have insurance that you've been paying into that is going to cover them because you just defaulted on your loan. And so until you pay more than 20%, and it used to be that if you paid, let's say you paid 5% down and then over the years you paid down to 20%, or with equity, you got up to 20%, then it would automatically fall off. It doesn't do that now. Okay. It does not just automatically fall off. So now you have to really watch and see, am I where I need to be? Have I paid in 20%? Because then you can actually call the lender or whoever, holds your loan, and tell them, hey, I need you to drop this. Sometimes you have to refinance it off, but a lot of them will actually just take it right off. But you have to call and get their attention to it because obviously they want you to keep paying them. Why would they let you know that you're done with paying the PMI? So make sure you're watching that because over the last couple of years, if you've owned your home for 4 years or more, you probably have equity in it because we've risen that 20% the last couple of years. So make sure that you're looking at that because you can call your lender or whoever holds your loan and say, take this off. But the good thing is for new borrowers, for new buyers that are entering, they have dropped the PMI cost of what you have to pay. So that is the way that they are trying to help new borrowers, new buyers that are entering the market. It could be a first-time home buyer. It could be somebody that's, just doing another one, but they don't want to have to put 20% down. So if you're putting less than 20% down and you have to have PMI, they're actually reducing that so that you're not having to put as much into PMI. So that is fantastic news for the spring market. Anthony, good to see you. In today's market, are sellers more open to buyer favorable contingencies as compared to last year? Yes, they definitely are. So I've actually had some recently where we had go under contract and they had a home to sell. And they took the contingency because they're in the same boat. They need to turn around and go buy a home and they're needing to sell their home as well. So they understood the fact of we're probably going to get that. And the other thing to keep in mind, Anthony, is it really also depends on the price point. So if you're looking at a $300,000 or $400,000 price point, a lot of those are first-time home buyers. And so they don't always necessarily have a home to sell. A lot of them are coming from a condo or apartment or possibly been staying with family for a little while to build that nest egg to put down on a home. So those are not as willing to take a contingency such as a home to sell because the market in that price point is a little bit stronger. Now, when you get to, 500 to 700,000, those usually are your, what we call your buy ups, right? You've had your first home. Now you're selling your first home and buying your second. And so with those, they're more willing to take those contingencies a little bit because A, they don't have as many multiple offers, and B, they're in the same boat. So they understand it a little bit better. They're having to turn around and buy as well. So they're like, as long as your terms are looking good, as far as, a lot of people, and this is something when I'm making an offer on a buyer or with a buyer, I always copy the lender to the seller's agent. And I tell them, feel free to call the lender, ask him about my client. Now, obviously, the lender is not going to share any of your information or, your job, how much money you make, anything like that. But the lender can tell the seller's agent, it's a clean file. You have nothing to be worried about. They are, putting this much down. They've had their job for 2 years. Like they're a solid buyer because that way it helps the seller's agent to feel confident to go to their seller and say, hey, yes, they have this home to sell contingency. However, I spoke to the lender and their file looks really clean. We shouldn't have any issues with the buyer as far as their financing. They've only got, maybe we drop it from a 7-day inspection to a 5-day, right? To make it look a little bit better. And so that way we get our contingencies just bam, we get them done as quickly as possible. That way we're making our offer look as good as possible because we have this little, darkness over here with the home to sell. So if we can make everything look positive over here, maybe they'll overlook the fact that we have that extra contingency. So I hope that helps, Anthony. Daniel, good to see you. Thanks for tuning in. So yeah, a lot of things going on this spring. I was very, very excited to see the fact that they were reducing that PMI because that's something that is major. And actually something I wanted to tell you guys, just because this kind of goes back to the PMI, but it's a little bit different, but I feel like it's something that's so important for people to know. And a lot of people do not pay attention to this. Again, going back to the last 2 years, a lot of us have gained a ton of equity. Are you insured for the correct amount on your home? Because God forbid something happen, the insurance company does not always readjust the value of your home. And so that is something that is so, so important. To me, this is probably one of the most important things that you can do for yourself is calling the insurance company and asking them each year, what do you have my home valued at? Because the fact is of the matter is, let's say, you know, Anthony's got his house and he bought it 8 years ago, and the insurance companies never bothered to look at what the new value is. And so they have it valued at what it was 8 years ago. Well, now Anthony has a flood or a fire, and he completely loses his house. And so he calls his insurance company. Number one, he's distraught that his house just burned down, but now he's got to call the insurance company and they're like, oh, we'll give you $300,000. What? The house next door to me just sold for 600. Oh, well, 8 years ago, you never looked at the value to see that they had moved that value up as inflation was going, as your equity was coming in. So I just had an agent in my office that unfortunately one of their clients had this happen, and they lost so much money, and they're going to have to basically buy a new home. They do not have the money to rebuild on that lot. They're going to have to just sell the lot as it is, take a hit with the finances, and go buy a home with the money that the insurance company will provide them with. It is detrimental if you don't make sure that you're taking this into consideration. So I am hopeful for this spring market. I hope that you guys are too. I appreciate you guys all tuning in today, and I can't wait to see you guys next week. See you then.